And so, happy Monday. Happy Monday. Let's do it again. Disclaimer, do not copy, remix, or reproduce any of my material without written permission or legal action will have to be taken. I love you guys so much. Join the world famous stock club. So if you want the greatest stocks and greatest entries on the planet, join us. You'll get the 4 best stocks for your retirement, the best growth stocks to invest in, the best places to get into the market called out by me, the 2 best places where to get into the market, additional entries from the algorithm Athena, 28 bonus picks on the year. And now we're switching to a format of a 60-minute call at 9 p.m. Central, once a week on Monday nights after the show. If you have made money with Stock Club, put yes in chat. If you heard me call Bitcoin dropping to 28,295 when it was in 50,000, put yes. If you never want to guess again what to invest in long term, Stock Club is a program for you. August 1st through 3rd. My birthday is August 1st, so we're going to do the Stock Club flash sale then. It will be the last one for the year. There will not be one for Christmas. So August 1st through 3rd is the last flash sale of the year. If you want to join the Red Panda Crypto Club with me and the Dream Team, you'll get the 5 safest cryptocurrencies to invest in. Bonus call with me and the Dream Team for the first 500 people to join. The 3 best prices of where to invest every month given out by us. We have some special bonuses coming out this month for you. Additional entries from the algorithm Athena, and then 3 surprise bonus picks on the year, and some of the best damn entries on the planet, excluding nobody, because nobody was talking about Bitcoin going to 28,000 before us. So if you want to know where to invest in crypto, come join us. Red Panda Dream Team Private Trading Bootcamp will be coming soon. Trading After Dark will return in September. I miss you guys so much. The Stock Club call will be tonight, 9 p.m. Central on Zoom for Red Panda Stock Club members only, and subscribe to my YouTube. So once we get to 100K subscribers are going to do a giveaway. So I'm going to give you 3 stocks that I love that I've never told you about. I'm going to give you an exclusive Stock Club sale, 1 open house to live trade futures with us in the Dream Team, an invitation to a live taping of Unfiltered, a breakdown of the top 100 NASDAQ stocks and the 25 that I love the most, 4 episodes of Unfiltered, a secret indicator to use to buy stocks that I've never mentioned before here or anywhere else. And we're going to have a private party in LA for the Red Panda family. So once we hit 100K, these are the things you guys will get. Thank you for supporting. And then Red Panda Real Estate is coming soon. Lastly, college athletes, I want to sponsor you. So if you haven't heard from me yet or the team, or if you're an athlete or a parent or a friend or an agent of a NCAA Division I athlete, please email me, ian@joinredpanda.com, and then we can talk this week. I love you so much. The 3 other indicators to use with the Bender cycles to predict recessions 99.98% of the time will be on TikTok tomorrow in the Stock Market Secrets edition. Let's go. So I saw this great post from Michael Batnick. Kudos to Mike. I love you, Ben, Josh, dearly. Look, Microsoft's year-to-date market cap, so in 1 year, is $441 billion versus Walmart total market cap is $397 billion, which I thought was incredible. And if you look at like Nvidia's market cap is at over 450 million. JP Morgan is right at 450. Johnson & Johnson is at 450. Amazing. The crazy part about this is that Microsoft's growth in 1 year matches JP Morgan's lifetime market cap and Johnson & Johnson's lifetime market cap. Please put in chat, Microsoft is one of the greatest stocks to invest in. That dead season from when Ballmer was CEO, it wasn't that much fun. But this goes to show you, once you have great management, great team, great products, Azure is amazing. I know a lot of people may not like Word or Office products, but the ecosystem that Microsoft has created has allowed them to hit one of the craziest market cap numbers in 1 year that I have ever seen. And this is a hard pill to swallow, but it has to be said. Like, you determine where you are in life up to this moment. So if you are enjoying the fruits of your labor and you love where you are, congrats. Continue to do what you're doing and add to it. But if you do not like where you are presently, you have to make some changes. So your inconsistency, the lack of discipline, procrastination are 3 terrible traits that are holding you back from where you want to be mentally, physically, and financially. And for me, that's why I was like, okay, I have to do this 40-day liquid fast. And man, do I tell you, some days I fantasize about food that I don't even eat or like. So I know some of you saw me post. I was like, man, I would love a zebra sandwich on a brioche bun with onions and barbecue sauce. Like, your mind plays all these tricks on you. But I was talking to my brother last night, and I was like, if most people can't even sacrifice not having food for 7 days, when you can still get nourishment as babies do through liquid supplementation, are most people capable of hitting $2 or $3 million in a year if they say that that's what they truly want to do? If you aren't where you want to be right now, please focus on your consistency, your discipline, and eliminate procrastination. And a lot of the things that are in your life that you don't want will certainly go away. Now, you know, I'm an Apple avenger for sure. Like, and the crazy part, like, I don't even love Apple products for the most part. The company and stock I love, right? But look at this. Apple makes enough money from their bond holdings to be a component in the S&P 500. So most companies, when they're holding bonds, it's like insurance, combination of mitigation of risk, and then also not to bleed down their capital. Kudos to Michael Batnick again for finding this. But the crazy part is that they make so much money that their bond portfolio alone is bigger than most companies. So when we're talking about moats or true competitive advantages that will last for a century or half of a century, this is one of them. So when you're doing your analysis and you're doing your versus of stocks and you're saying, hey, is NEO better than Apple's bond portfolio outperforms what NEO is doing. That's before we even get to the main product line, before we get to AirPods, before we get to. So I know sometimes you guys are like, oh, you're always mentioning this company, but it goes to safety. And the truth is, like, I knew what the growth of Apple and Microsoft would be. The true test on if you truly want to be free is if you're going to put your money into assets that are truly going to grow consistently. I say all that to say, if you have not put money into Apple and Microsoft this year, it's only because you're afraid of making money and you don't truly want to build generational wealth as much as you say that you do. When a company this dominant and has been this dominant for this long has a defensive fund of this large, if you're not storing some of your money there and that cash value will not go away anytime soon, I think it's an absolute mistake that you'll be making. Newsom speaks on climate change, and we talked about water. Let's look at this clip here.
So any Northern California loves and appreciates the Folsom Dam and the Folsom Lake. You come up here with your kids. I've got 4 kids nearby Sacramento to enjoy all the recreational opportunities, but particularly the swimming. That's why we have a sign here that says kids don't float, just reminding them of how important it is to wear their life vests. Of course, we do that because, well, there's no lifeguards on duty. That sign's appropriately placed here, right on the edge of the water line, including these lifeguard stands when we do have lifeguards. Here I am now walking into the lake about 1 inch, 2, 3 foot, now 2, 3 feet, probably halfway up my waist, would otherwise be in water at this stage of the year. 26%, you can see behind me, 26% capacity. And we're in July. Over my head, interesting, you can see just over the horizon there, just about noon, you'll see the plumes of smoke from the Dixie fire in Northern California. This sort of sight sort of punctuates the moment we're in our history, not just California's history, but you're seeing this all across the west coast of the United States with this mega drought. And the conditions are such, they're leading to parched conditions where you're getting dry lightning strikes, other issues that are leading to these wildfires. This wildfire, the Dixie, one of the largest now in California that we're currently battling. This drought is real. Climate change is real. If you don't believe in science, please, you got to believe your own eyes.
I was doing some research this past weekend, and I've been making a big transition going into my birthday to focus on being the best student possible and not focusing even on teaching anymore. And I dug into these lessons from GAN. For those of you who don't know, if you're not familiar with GAN boxes, you should go Google that and research. Homework assignment number 1. But 3 lessons. Number 1, divide your risk capital into 10 equal parts. So technically, if you're going to put your money into the market, you should break them down into 10% positions. I think truly you should do 20%, but I think this is a great lesson from Gann. Number 2, do not trade against the trend of a market and only trade liquid markets. Number 1, please put in chat, I will always trade with the trend. You notice how this person that was surfing, they're going with the current. A lot of times when people are like, hey, I want to short the S&P because the market is falling, and Josh talked about this last week, like the art of shorting and making money from being a short seller is an art and a science that people have practiced for decades to get down. But if you don't know how to properly risk, how to read tape, how to tell what the true direction is, you're going to get destroyed. And most important, there has to be liquidity in these markets. And I'll walk you through this later to show you what hedge funds and big firms are investing in by the data, so you can understand why I tie my portfolio to them as well. And number 3, which is great for traders, use a break-even stop when the position hits 3 points in profit, dependent on the volatility. So especially in the futures market, and every futures is correlated or calculated differently, this is a great tip. The only one I would say is probably not for ZB, but for every other future, once it gets into profit 3 points, move your stop up, lock in some profit, let it run. And then that way you can take all the risk off of the table. Last week, everyone's like, oh my God, the market's going to fall. And I told you, because it was partially because of the Delta variant. A big factor in that market, however, was the expiration of the futures market. And then Wall Street went on to a 4-day win streak. Please put in chat, I will not worry about the short term. I will only focus on the long term. S&P 500 today hit a high. You have to stop betting against the market and hoping that, and truth be told, like a lot of people want the market to fall because they didn't invest as much as they should have last year. And I get it. When I didn't invest when I should have in 2008, and even though I had a buddy that told me to invest, I felt like a dumbass. And I was like, damn, I hope this shit crash again so I can get in. But every pullback, and the 2% pullback is not significant, but every pullback is an opportunity to then get into the market if you remember that the market crashes a little bit every month. This week, I want to show you where you can easily find out how much short interest there is in a stock. So write this down. The site is stockanalysis.com. And I'm going to walk you through and show you that Riot has a 20% short interest in it. So if you can see, this is Riot Blockchain, stockanalysis.com. If you scroll down and go to the stats tab, you can scroll down and see a few things that are pretty interesting. So short interest, 19.96 million, 20.80% short percentage of shares out. And then you can also see what the short ratio is, how many days they'll have to cover. If you go and then compare this to, let's say, so if we look at Square, we can see 7.03% of shares out. Right. And then how many days would they have to cover? 4.11. Now let's look at something super safe, like let's say Microsoft. So I'll come down. This is the short selling information. You can see, but 0.67% of the outstanding shares have been sold short. So the higher that ratio is, the more money that people are betting that it's going to fall apart. The smaller that ratio is, the lower the probability that it's going to fall apart. So let's even go look at Amazon. You can see here 0.90%. Perfect. Let's go look at Apple. Not my baby, not 5% of the people want to short, but even that 5.09% want to short. For me personally, I like for this to have a percentage of 8 or less in order for me to feel comfortable investing in the long term. So even before Nvidia was about to go through a split, some of you were like, hey, should we short it? I'm like, no, the stock is going to rise. If you've done your homework, you know what happens post split. And even here, 1.29%. So even out of the ones that I went through now, Apple is the one that has the highest amount of short interest. But for me, I'm like, great. If all the other ones that I have are at 0.6 and at 1%, the probability of them falling apart and losing is very, very, very little. I posted this over the weekend, but I want to show you guys this clip.
I've seen you be $500,000 up.
I've been up $2.5 million.
What do you got on you?
Nothing.
What'd you put away?
Nothing.
You get up $2.5 million. Any asshole in the world knows what to do. You get a house with a 25-year roof, an indestructible Jap Economy shitbox. You put the rest into the system at 3 to 5% to pay your taxes, and that's your base. Get me? That's your fortress of fucking solitude. That puts you for the rest of your life at a level of fuck you. Somebody wants you to do something? Fuck you. Boss pisses you off? Fuck you. Own your house. Have a couple bucks in the bank. Don't drink. That's all I have to say to anybody at any social level.
And last week when Trap was on, he did an incredible job. Everybody put Wall Street Trapper in chat. He did an amazing job of saying, like, if you can't invest in a primary company, to then look at some of the ancillary businesses that are tied, or some of the companies in the supply chain. So one of the homework assignments that I had everybody in the stock club do was to look at who are some of the publicly traded companies in Apple's supply chain. I'm not going to give them all, but let's go through some of them right now. So 3M is one of the companies in their chain. You can write that down. It's an okay company, slower growth, but it's safe. ASX, great company, really, really good growth. Let's go look at the history of the company. And you can see during the recession of 2008, it went to $1.36. In 2020, it went to $3.41. It's now at $8.26. So even enduring these declines, and you want to stay away from buying from these tops. So anytime it hit these highs up here, you want to stay away from. And then during these lows, you want to try and acquire some. It's not one that I would recommend that you guys would have. Probably a better swing trade, but you can look historically and see what this company has done if you look over 20 years. Alpha and Omega Semi, AOSL is a ticker. Put yes or no in chat if you have heard of this one before. Let's go to AMFK. Go APH. Another good one. Another good one. Let's go 20 years. Look at the growth of this over 20 years. And let's just say, even if you got it in 2016, was at $34, is now at 70. A little bit of a slower grower, but these are the ones that are safe. It's the 200-day moving average. You can see in 2020, it came down to this 200 moving average at 35.40. It got down to 31.59. You wouldn't have pulled your hair out. You wouldn't have screamed. If you would have bought in then, you would have been good, got in, and you would have been done. You would have been done. Great job for those of you that have had that. ADI, Analog Devices, solid company. AVGO is the next one. Broadcom, GOW. You can see the growth and see how that 200-day average and then the yearly open, how you could have bought in at that price. So this year you could have bought at 36.05. It's currently at 41.09. You want safe and secure investments to be able to pile your money into, so you don't have to worry about having nightmares about where your money is invested at night. And we go to DIOD. Let's go to Flex, FLEX, IIVI. Let's go to JBL. Great growth. Last year, you would have been able to get in at 23.85 based on a 200-day moving average, which is a way to get in. And it's currently at 57.23 as of this show. And then the last one, let's look at KN, which is Knowles Corporation. Out of these companies that I've mentioned, which ones have the strongest growth and would have given you the best return? And put it in chat. I touched on this briefly last week, but more than a third of Americans are considering quitting their jobs. I think people have just gotten to a place, and COVID has made people see this, that life is too short to spend time at a job that you hate, dislike, or does not make you feel alive in some way, or if you feel taken advantage of. So I will say this, for those of you that are exceptional employees, this is the time more than ever when you should be aggressive about your hiring, your benefits packages, and salary compensation. For my business owners, this is a time more than ever where you need to make the compensation packages better and give a lot more flexibility. And this is why I've always told you guys, like, the traditional methods of like sitting in the office for 8 hours and answering email and doing things that don't actually drive the business, that era is over. That Henry Ford era, early farming system era, Rockefeller era of that's going to change for maybe a 5 or 6 year period. Now, at some point, People will get comfortable again, and they won't be mind being boiled again, proverbially, as the temperature in the pot heats up. But for the next 4 or 5 years, we're going to see a wave of people that are going to quit faster, that are going to want higher compensation, and of course, they're going to want better treatment, in which they deserve. So begin working on those things to offset some of the losses that you could experience. Just want to give you a heads up. I want to give a shout out to this brother for saying that this amount of verifiable, valuable information that you give on a daily is amazing. I appreciate you so much. And it's an honor for him to say that I'm truly the Moses of our times. I'm just trying to do my job. I'm honored to do the show with the fellas. Troy and Rashad, thank you, like, dearly. And I hope to keep doing a great job for you guys. We haven't had Jeremy on in a minute, but I love this post that I saw on his page. And it said the S&P 500 hit an all-time record high since 1900. The stock market has hit a record high in 290 different months, 20% of all months. This chart shows $1 invested into the U.S. stock market going back to 1900. $1 in, of course, would be 100 grand now. And then the thing that I want to stress, no matter how, because even with news cycles have to get ratings. It doesn't make them bad, but often when things are good, people don't care about the market. And then when you hear breaking news alert, the market fell 6%, everyone pays attention. But the thing that you have to be focused on is how often the S&P 500, the Dow, the Nikkei, the Russell 2000 will hit these highs. And the greatest investment that you'll make is having your money tied into these vehicles to make money for you. One of the best quotes my dad has ever told me when I'm going through a tough time is nothing is the end of the world except the end of the world. And I saw this post that reminded me of this, that nothing is forever in this world, even our problems. So if you're going through something, and I know a lot of people right now are currently going through tough times, like, I promise you it's going to get better. And if we can ever do anything to help you, please let us know. But the drama season, or the season of winter that you're going through now, will eventually end, and spring and summer will present itself to you. The 6 biggest doctors in the world: sun, rest, exercise, diet, self-respect, and friends. Stick to them at all stages in your life and enjoy a healthy life. I will say this juice fast is tough, but man, do I feel amazing? Do I feel happy, more inspired, more joy? Oftentimes, that's why I tell you guys, like, money alone would not buy you happiness. And when I was broke, I would hear that. I'd be like, shut the hell up. Give me the money. It'll make me happy. Like, it will provide stability. It'll provide choices. It won't give you purpose. It won't give you passion. It will not give you completion. But these other integral parts are key components of wealth, which the true essence of wealth was centered around health pre-1929. So in order to live your best life, you do have to have all these in combination. So I want to make us to have a concerted effort to put more attention on all these at the same time, and not just to focus on the money part and not have the health and happiness that goes with it. Since we cracked Dow 35,000, the next big target we have looming over us is Dow 40,000. May take 4 years to get there. And if you feel like you've missed out on Dow 20, for those of us that are seasoned investors, we remember when Dow 20,000 was like a big marker, and that flew by. Dow 30,000 came out of nowhere. NASDAQ is at 15, easily above 15. The next mark will be Dow 40,000. If you have not invested in some of the companies in the Dow or the index itself, get ready. You have 3 or 4 years for it to get there. Here are the 10 largest economies in the world. Number 1, China at 64.2 trillion. I am excited yet terrified at the same time when I do this episode about China being our biggest threat, and why I think they may be putting the nail in our proverbial coffin already. Number 2, India, 46.3 trillion. Number 3 is United States with 31 trillion. Indonesia, 10.1 trillion. I'll scale down. Egypt at 8.2 trillion. Japan at 7.2. Germany at 6.9. Some of the data and revelations that I've had doing this research about how China is so much further ahead of us is amazing, but it's terrifying, because if we don't get our affairs in order, we are going to slide down this list pretty damn far. Bitcoin versus S&P 500. So kudos to Jeremy. So here's how 10,000 in Bitcoin has performed compared to the S&P since 2021. Currently, S&P is up 18.7%. Bitcoin is only slightly up. So I'm going to give you guys both sides of this argument. And the thing that, whether you like a currency or an asset class or not, I've always told you, because I know some of you guys, I mean, you hated crypto and now so you talk about crypto. Like, when I tell you I'm like one of the best to do this, like, I can be agnostic about entry and still not love an asset class. I told you my horror story about how the Mt. Gox thing and how much money I lost. So I was like jaded, right? I was like one of them exes that was like talking bad about it because it didn't go well in my favor because I got my ass handed to me in the Mt. Gox scandal. But Bitcoin had a great increase, therefore it had a great decline. One of the things that I hear Mike say is all the time, which is a great quote that I take to heart, like, you cannot have tremendous gain without tremendous drawdown. If you want slow, very safe returns, 12%, you're not going to draw down that much. But if you want 115% return in a year, you may draw down 90%. So, but first, let's be like Ben Affleck. Kudos to Investing Latina. I saw this off your page and grabbed it from her. Kudos to you. I think you're amazing. You need to come on the show soon. But be like Ben Affleck. You got to hold on to your assets for the long term. The boy got moved out in 2002 and came back 2021 strong. This is the power of long-term investing if you hold on to your assets, right? But what comes next for Bitcoin? So Bitcoin bull and bear cycles are getting shorter until now. So like if you look from 2014 to 2015, it had 633 bearish days. Then from 2016 to 2017, 845 bullish or upward days. Then 2018 through 2019, 361 down. Then 2019, 192 days of upward momentum, right? Then 2020 hit, 260 days down. And now 407 days up. So what comes next? After a bear cycle or bull cycle, and we're seeing that they're tending to repeat, what I would do, I would take the average. So I would add these 3 cycles up. I would divide them by 3 to give me an estimate of how many days the Bitcoin could be down. I will also take 845 plus 192 plus 407. I would divide that by 3, and that would tell me for how long in aggregate Bitcoin on average should run. Once you know that, you don't have to guess. I'm going to give you guys a tip, and I want you guys to join Crypto Club if you want the entries to be able to get in, because nobody called 28,000 before us, like to the head when it was at 50. Kudos to when Mike was on. But you need to look at Bitcoin and set levels when it drops 50%. Don't put your big majority of money there. A 50% drawdown and then 83.2% drawdown area. Because normally Bitcoin has a tendency to slap back sometimes 86%. You don't want to have the nail right on the head of that because you may not get filled. But if we ever get to a point where it draws down 83.2% and you're able to get in, and that's not how I got the calculation for 28,000, but it will help you get an edge in terms of your entries into the market. I saw this quote and I thought it was amazing. And as I'm on my journey to be better in every way, I thought this was profound and I wanted to share it. Being mean is expensive and being nice compounds. This is not an ad. I just like this guy and the site. If you go to behaviorgapradio.com or check out his IG, he has a whole bunch of like cool like charts and graphs like this. But one of the things, especially as we get older, with my birthday coming up, I'm like, man, what are like some of the 5 things that I can do to be better? Like, I want to be nice in every scenario, regardless of what a person may do to me. Because like only a person is responsible for their energy. I'm only responsible if I entertain it or how I choose to interact with it. If I choose to interact with someone or their energy, I want to be peaceful. I want to be kind. I want to be loving to them, because you never know what someone may be going through. Back to Bitcoin. Not buying Bitcoin is an expensive mistake. So if you look at 10-year returns, and I've had this conversation with people privately, but a couple people publicly was like, why don't you look at the 10-year return in 5 years if you want to compare apples to apples? And I'm like, I have. The numbers are astounding. So like 1 year, Bitcoin versus S&P is 239 versus 33%. When you get to 5 years, Bitcoin is up 4,835% versus S&P's 100. 10 years, 232,754% gain versus 225. So when I tell you guys like, hey, man, that 2013 being in, my God, it hurts my soul. And kudos once again to Matt Schlitt that was working at Facebook, that was telling everybody who knew about it. And I was happened to get the information from him. The returns are insane. And for those of you that trade, you understand that Bitcoin moves like NASDAQ futures. So when it gets on a run, it is hard to stop. So I want you to show the data in comparison of what the returns are. And the answer is not to pick one or the other, but to invest in both asset classes. I saw this quote from the good team at CoinGrams, and it says, cover your needs. Take bets where if you lose 1x, if you're wrong, but you can gain 100x. And I'll tell you guys this, when you're investing long term, whatever the high is, when you draw your calculations with your fibs, please write this down. You need to start placing your marker on the chart where your 100x gain would be. Then you need to go see, especially in tech, how many years it takes in order to hit that mark. Around that generational mark is where most companies tend to give you that 100x gain. And forget stocks. Neglecting your health is the worst investment of all. It makes no sense to have all this money and have all these assets. And from a generational standpoint, I want us to then start focusing on generationally passing on good health habits to our children, our family, and those that we truly, truly love. And I'll say this one last time, like March 3rd, 2021, I stated Square's the new JP Morgan. An amazing brother at the firm stated buying Square is like buying JP Morgan in 1871. And for all my creatives and all my entrepreneurs, because at first, I was bothered. But I had a couple interesting conversations, and it's a tip that I want to share for all entrepreneurs and creatives. Like, people are going to take, remix, or license your idea without permission, but it's important for you to execute upon the idea faster than everyone else can in the interim. But with that said, I want to give you the top 5 reasons that I love Square. So in addition, I think before Microsoft picked their new CEO, I always hoped that Jack would have been the CEO of Microsoft, but great track record, doing a great job at Twitter. And I don't think he gets enough credit for being able to run Square and Twitter at the same time. But look at these stats, like 30 million users on Cash App. It's one of the easiest ways ever to take payment. So if you go back to 2003 or 2007 and you told someone, hey, if you take out your phone, you can put this little box on your phone and take payment from people, they would have looked at you like you were an alien, because it wasn't even possible at the time. So it was easier for anyone in comparison to if you had a business in 1980 or 1990 or 2000. And it was hard to get a merchant provider that was not destroying you with fees and then also getting you faulty hardware. It's it's better than FIS, ADP in comparison, GPN, 13.17 billion in revenue, only 7.03 shares are sold short at the time of this writing. And I said months ago, the reason that they acquired Tidal, I think they have an incredible way to get data at scale in terms of demographics and psychographics that other companies cannot have. So now if someone in Oakland is a huge fan of Meg Thee Stallion, they can see that their purchase history is in alignment with someone who likes a certain business, they can then have certain integrations there to make custom product offerings that other companies that are competitors of theirs that cannot. And now with the announcement of the new company that they're building tied into crypto for that open developer platform at scale, I think over the next 8 or 9 years that they should hit 450 to 512% growth from here. Here are my 7 favorite tools to get an edge in the market. Please write these down because these are super damn important. Number 1 is hypercharts. Let's check this out. So let's say I'm watching the show and I'm I want to compare Teladoc versus, let's see, let's pick a company, Twist Biosciences. This will allow me quickly to so this is revenue. So Teladoc's revenue is in blue. Twist is in red. And let's say I add Affirm, which is in yellow. And then let's say I want to add Amazon in green. So of course, Amazon dwarfs everything. So instead of pouring through financials like crazy, and I know a lot of you guys are asking me, hey, like, how do you read some of the investor relations newsletters and 10Ks and stuff like that? I'm like, you really don't need to per se. But even if, of course, if I add Apple dwarfs most competitors, or let's look at this. Even if we compare Apple, and we come down here, and then let's compare that versus Tesla, just to show you like the comparison of scale. Or let's do SPC, Virgin Galactic. You can see in comparison, they don't compare. So if I'm looking at revenue, profit margin, things of that nature, I can quickly use this site to be able to see how much better one is doing versus another. Or if I look at Target is an amazing stock, amazing company, but you can see Apple dwarfs that. But Target is a company that I do recommend. If I want to look at gross profit, let's look at this. Apple is still beating Target. Let's do Target versus Fastly. Okay. Target's winning that race. Let's go to one of Trap's favorite, Chipotle. One of the greatest stories of all time. So we can see what the revenue is there. And let's say if we want to add in American Express, which is in green, and let's add one more. Let's do CRISPR, because that gets brought up a lot. CRISPR's in purple. So let me just do Fastly versus CRISPR. Take out Chipotle, take out American Express. And you can see, I know everyone's saying that certain things are the future. When you look at gross profit, they're getting beat out overall by Fastly. If we look at revenue, you can see the same story. And even if you want to look at revenue year over year, you can compare these things, market cap, and you can see in one click which one is doing better in comparison. So hypercharts.co is one of my favorite sites that I use if I need to do some quick analysis on a company. Another site that I use if I want to get a cheat code is dataroma.com, and I'll click here right on the super investors tab, and then I'll go through and look. But this is the part that's great. You can look at their top holdings from left to right for every major investor here. So let's look at Chris Coleman at Tiger Global. And then we can see what his top holdings are, what the percentages are that he has under management. You can look at Bill and Melinda Gates Foundation. You can see how much they've either added and or reduced. And let's see if there's anybody else. Let's look at Charlie Munger. Bank of America, Wells Fargo, Alibaba, US Bank Corp, PKX. Now, even in this, you can see super concentration because Charlie has an edge. There's certain markers that he's trying to meet, but what he does not have is 58 stocks in his portfolio that he's managing. That is for a reason, because it's easier to study 5 businesses, going back to that 20% ratio that I told you guys about earlier, than it is to study 45 different businesses. But to round this list out, SMIs, oldschoolvalue.com, StockRow, and then a quarter app if you need to understand what the quarterly reviews were. And then, of course, a couple of weeks ago, I went on this rant about, best entries of all time, greatest investor in this era, excluded nobody. You know what? I'm a little rapper right at the end. And then a good brother was like, hey, man, if that's the case, then why aren't you a billionaire? But and then like billionaire and these ethereal numbers are just measurement of how much capital is flowing. But then it's really about how much money is under management. So and I told him 280 million under management, which is a small number if you're going to run a fund, is to get to 1 billion gross is only 358% growth. I've done that percentage on 5 or more stocks in the last 14 months alone, on accident, many of which I gave away here. Even 2.3 billion under management at 358% growth will put the fund at 8.234 billion. If I walk away with 33% gross, I would not have that small of a percentage in the fund, but for hypothetical reasons, it will put me at 2.7 billion gross. I'm 38. The average successful hedge fund manager is at 46.3. 2027, when the next crash happens, I will be prepared. So what if all this time, my plan was just to give the picks away for free. So then by the time I do have the fund, then people already have the money to put into the fund. But that's another point that I'll talk about another time. The prices of lumber have been falling since its all-time high. And that's why I told you guys, don't buy things that are high. After a 59% decline, the price of lumber is now down in the year. It was up over 130% early in May. Let's go look at the chart. And this is the lumber chart. So the high, the lumber future. So in May, it was at 1711.20. It is now at 490, and it's probably going to go back down to that 200-day moving average of $401.70. Is this your king? This is why I tell you guys, anytime anything runs up 200, 300, 400% really quickly, the value of that, if it's not sustained, is going to get cut in half. And it's coming back pretty much to what the June 2020 high was. Don't chase. So for everyone's like, oh man, how does it never be cheap again? There were even people that were beginning to buy lumber and store it. Now they can't give it away. Please be mindful of when you're chasing things that are at a high. Please put in chat, I will not chase no matter what the price is. I will wait for my ideal area. Amazon has already announced their venture into Bitcoin, but wait till Apple announces theirs and watch how it moves the market. The 5 companies that I'm looking at to go in public in the future, I've talked about them before, but Stripe, Robinhood, SpaceX, Reddit, and Discord. I wish Microsoft could have bought Discord, but it didn't get a chance to happen. Now, how many super investors have ownership in this stock? So when you look at Dataroma, this is the thing that I'm looking at. So Square, 2, not bad. Love Jack, should be more, but hey, so be it. Microsoft, 23, not bad. Microsoft is Bay. Apple is Bay. I'm not mad at it. Apple has 10 super investors that have ownership in their fund with this particular stock. Let's look at VOO. That's just why it's the base. VOO has 723 super investors that have this in their portfolio. So if 723 of them have this under their holdings, what is the probability that this is going to fall to the floor and destroy your portfolio? And especially when it's a Vanguard product, going back to Vanguard and BlackRock running the investing worlds and the ancillary worlds that are attached to it. I always tell you, there's a lot of like people want excitement and say, well, I picked the and I get it all the time. Hey man, I know you call Apple, Microsoft, and Tesla last year great, and you've been in these, but what's the new one? There is no new Hove. There is no new Tupac. There is no new Drake. It is them. Those are once in a lifetime generational talents. You have once in a lifetime generational stocks. You can either invest in them or not, but if not, you are choosing to gamble. I get the theme and the thesis, but often the one that you're looking for is the one that's here now. Two tech, two index, no stress. But with Vanguard running the planet, BlackRock running the planet, if this is a part of your core, you'll be fine. Say it with me. Long-term investing is the wave. You must hold stocks for at least one generation if you truly want generational wealth. Two tech, two index, no stress. And look at this. Apple generated $274 billion in revenue in 2020. iPhone was at the top with 50% of all revenue coming in from iPhone. Apple Services was second, responsible for 19% of the company's revenue, which is amazing. This blew my mind. AirPod revenue versus top tech companies. So AirPod revenue is higher than Adobe, Nvidia, AMD, Spotify, Square, Twitter, Snap, and Shopify. So if there's one thing you can hang me on last year for sure, is that I was like, I don't think Snap's gonna go up. And then Troy said the same thing. I was wrong. But man, this Apple take has been working. Like AirPod just one. And that's why I tell you guys, like, if Biden's gonna break up tech and they make the App Store a publicly traded company, and they also spin off Apple Music and a podcast division, AirPods alone has tremendous value. I just told you about the bond market, what that is worth. But the AirPod division of the business, you want to find conglomerates that have super sectors inside of them already, or super category, and they're usually the ones that have innovated and made. And now, of course, a lot of this revenue comes from people like me that have lost the damn AirPods and they had to go replace them. Nevertheless, more revenue than Adobe, Nvidia, AMD, Spotify, Square, Twitter, Snap, and Shopify. And I love Shopify. And almost more revenue than Uber. What more can I say? Visa all-time return, 1,442% return. Please say it with me. Long-term investing is the wave. Now, with Benner cycle, that helps you predict the market. To pair with, please go Google and read every article that you can about the cycle of everything. You guys want a super cheat code and want to start to, like, this won't give you the crystal ball, but this will give you the base to store the ball on if you put these together. And there's a reason why I went over Fibonacci first when we first did the show, I think episode 4, right? But if you pair Fibonacci with inverted yield curve, with Benner, with this, you won't ever be in the dark about when a fallout could happen. The next recessions are due in 2027, 2033, 2037, and 2041. Get ready. And they could be a year or two early or late. But these are the cycles on which they could happen. Be prepared. Start to look at companies that can fall apart. And during the recessions, tech, pharma, and healthcare are the prime industries that are ripe to have good growth and take a massive advantage of these drops. Here are 15 of the top growth stocks of the future. So you can screenshot these, and the next week I'll go over them. But Fiverr is really damn interesting, and I'll dive on that deeper next week. Top 3 cloud stocks: Microsoft, my baby; Amazon, incredible; and Twilio. Here are the historical correction of Bitcoin. This is what we talked about before. 86.9% drop in November 19th of 2013. That's when that drop was completed. 83.6% drop on December 17th of 2018. 60.8% drop on December 17th, 2020, when that cycle was completed. You need to go look at what is the cause of these events. A lot of you know that have already been in the crypto, but for those of you who don't, please go look. And then, what number did I tell you that you should set your entries at percentage-wise if we get a historical drop? Are we in a bubble? If the PE ratio, so January 1st, 2009, the PE ratio was at 70.91. July 16, 2021, it was at 49.97. I don't worry unless it hits 55. So if you go look at the overall PE ratio of the S&P 500 or the overall market, until we get to 55, I won't worry. Stop worrying about bubbles. Please stop worrying about crashes. Crashes are an immense and incredible opportunity to then get the companies that you want on deep discount. That will only change unless quantitative easing goes away. And once again, I want to say, no one is coming to save you. Going into my 39th birthday. And I've had this revelation for a while. But the thing that I am saying to myself more than ever, everything good or bad that is in my universe, I created, manifested, or planned to happen. Everything on earth is my fault. No one's coming to save you. No one's coming to help. And most people, even when you tell them your problems, they're just hearing you out to be supportive, but they truly don't care. It's up to you to fix it. But this is what changed my life forever about how I approach things. I first heard this on, I think, Tim Ferriss's podcast a few years ago. Then I had a chance to meet the gentleman who, in passing, who kind of made this popular. But after the age of 20, you'll only spend a small amount of time with your family and parents before the end of your life. So the guy was like, hey, I think at the time I was maybe 29 or maybe 30. And he was like, at 30 years old, once you leave your hometown, you may see your parents 80 more times over the course of your life before you pass or they pass. Every time they call you, pick up the phone, no matter what you're doing. And I thought it was such a profound statement because I never thought of it calculated in that fashion. And often when things are going well, we think that they're never going to end. Like, God rest the soul of my cousin Rick. Like, he was one of the bigger inspirations on me. And even one of my biggest regrets with family was I didn't spend enough time with him. Like, when Rick passed, I literally was like, good damn, God should have took me. He was too good of a person to be taken. So I say that to say, for the family members that you have and that you love, make time for them whenever they call. And my mom called me when I was going through this. I'm gonna call as soon as I'm done. I'm gonna love you. But keep this in consideration because nothing will impact your life like the loss of your family, especially your parents. Like, I'm so fucking thankful to be able to have both of mine. And that is a pain that you never really heal from. You'll spend a huge amount of your time between the ages of 20 and 60 with the people that you work with. On average, you're going to work with people 8 hours a day. And that's why I'm always like, hey, I'm very mindful of who I'm around, who I give my energy, my time, my effort to, because that 5 people, you know, kudos to all my friends. I love you guys dearly. Like, Dave, Ty, Gary, Bud, Sion, like, man, people who have been there, Marcus, Caleb, P, Dom, like, I don't leave nobody out. True, like, love y'all dearly. Chris, Jay, like, love y'all dearly. But the people that you work with, and especially if you're an entrepreneur, you're going to be spending an average of 8 to 12 hours, and you're going to see these people more often than your family. Please choose wisely. And before the age of 20, you'll spend a lot of time with friends. After 30, you'll spend a small amount of time with just a few important friends. You have to realize that my grandmother used to tell me this, and I was like, oh, that's not true. I don't believe that, because I was stupid, right? Not listening to grandma. But she was like, you're lucky in your lifetime if you get 5 great friends and then 5 great family members that you always get along with and never fall out with. That's why I tell you guys, please call the people that you love and check on them. And we all can do a better job of it. But this is what makes life sweet. The people that you hang around. And I'll tell you, like, as a person who's been really, 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 really broke, like, in college, lost my debit card. I was like, if they try and buy anything, be practicing shit on it. Like, to doing okay now, like, the moments that have been the most special have been around people that I cared about. It wasn't the thing. That's why even me now, like, my desire for anything materialistic has went away as I've gotten older, because I've experienced more people passing. And it made me realize it doesn't matter as much. It doesn't mean anything. Like, me being able to take care of my child and have time with him and time with my friends matters more than whatever exotic car that I can get. And I want you guys to keep that in mind. And at 30 years old, the amount of time that you spend by yourself increases until the day that you die. Also, that you have to realize that these are the 5 things that I learned from this, but most importantly, like, the time that you spend in your relationship is going to increase from the time that you're 30 until you pass as well. So the 5 lessons I want you guys to take away from this is: 1, a few close friends is way more important than a bunch of associates and meaningless connections. And we have to stop using the term friend so loosely as well. I see that a lot, but a few close friends is better than a few meaningless connections. Number 2, when you're with your family, be there, out on social. We've all made the mistake of scrolling to pass the time, but those moments that we get, and people are living fabricated or manufactured lives, they wish that you can have the family and friend structure that you currently have. Number 3, a good coworker and a healthy work environment is way more important than higher pay. And if you have an incredible coworker or team or staff, the higher pay will come with the right team. Number 4, don't rush love. What's meant to be will come. Have faith. Don't rush into it because you're lonely. When it's the right fit, it will be there and it will be undeniable. And then number 5, learn to love yourself before seeking love from others. And if you do that, for those of you that saw my post yesterday on IG, all the wealth and material shit is going to come from this. Because the energy of you being such a positive person, a sweet person, an amazing person, an enchanting person, things are going to gravitate to you. The one part that people, and even I don't stress enough, the material and wealth and even the aptitude or having the cojones to be able to invest a lot of money into the market and into business, that came as a result of me being kind and being around the right people. When I was around the wrong people, my actions were limited and I was a little bit more fearful. Now I'm around people that execute faster. Even when I told Rashad, I was like, yo, it was the time from which you had idea to execution. And he said one of my favorite quotes that I heard from Joe Vitale and Jim Rohn back in the day: success like speed. You can't sit on an idea for 4 years. Like, that's why, like, when I'll be walking out the house, go in the car, I'll stop, drive back, have an idea, write it down. Let me do it now. Because I look at every idea as a child. So if I don't give birth to this idea, 6 hours, a child may die. Some of you have been sitting on an idea for 6, 7, 8 years that you know could help the world tremendously, but you're afraid to execute it. And maybe you're afraid to execute it because of people in your corner are not best for you. And maybe because you're not best to yourself and you don't love yourself, you allow those that are not best for you to be in your circle. I love you guys. Over and out.